Good morning, folks, and happy Friday. It is 8 a.m. here in Chicago on Friday, the 12th of September, 2025. This is episode number 2685. Thanks for joining me. Quick reminder, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. If you can give me a quick mic check, that would be awesome. Just let me know how the sound is this morning. And also, while you're at it and you're typing away, let me know how you are, how you're doing. How has this week treated you so far? So let's jump right into the pre-market summary sheet here from Convergent Trading. Those of you who are in the accelerator program, we are starting today. You will get your first module today. Congratulations for being on board. Okay, so what is the overall market posture? Not looking so hot this morning. We have a mixed risk posture this morning. A fair bit of news. UK GDP came in line with their expectations. Industrial production is lower. Yesterday, we did get CPI. We got inflation at the year-on-year inflation at 2.9% in line. Inflation rate month-on-month was higher, 0.4% versus 0.3% expected. Core inflation 3.1% in line. And core month-on-month was 0.3%. So all in all, inflation still running slightly hot, but the market's still pricing in a high probability cut next week. So for the FOMC, they're in a blackout period still. And then in terms of news, there's a lot on the feed. U.S. President Trump says that Russian drones had no business being anywhere near Poland the other day. Poland had to invoke Article 4 and had U.S. fighter jets, U.S., Italian, and Dutch fighter jets scramble to shoot down some Shahed drones, Iranian-made Shahed drones that came into Russia. One drone had hit some sort of a residence or something. Anyway, when it comes to this stuff, you can't verify any of it, so you just believe you just kind of take it for what it is. But there was a response in the market, and that's why I bring it up. So there was that. Trump saying that Russia had no business flying drones into Poland, which is a NATO country. He says his patience with Putin has run out. He has suggested, and it's been rumored throughout the evening, especially after the European Open, you saw crude shoot up big time, bigly. You can see crude on the chart here on the heat map, up 1.75%. It has pulled back a little bit, but it's trading at 214% of relative range and 174% of relative volume. And just a massive move in crude. We'll look at that in a little bit. But the rumor was that the U.S. was going to push Europe into imposing strong sanctions against China and India to the tune of 100% tariffs and to choke Russia of its energy revenues. This, of course, takes supply off the table. Supply removed, demand remaining, causes prices to go up, and so you get crude shooting up, and that's been happening throughout. This information was confirmed this morning at about 7:30 Chicago time, and it just so happens that now the rumor has become news, so the market has pulled back. Buy the rumor, sell the news. This is an age-old thing in trading. Trump also suggested that Europe should take the $300 billion of Russian assets in Europe and send them to the Ukraine for defense spending. Pretty radical move. and a very strong turnabout in Trump's attitude about Putin. U.S. Treasury Secretary Basant says he'll meet with the Chinese Vice Premier He and other senior Chinese officials next week in Madrid. Trump's Fed governor nominee Miran set for a Senate confirmation vote on Monday in time for next week's FOMC meeting. And then Microsoft and OpenAI signed non-binding deal to redefine their partnership, allowing OpenAI to restructure into a for-profit firm. So this is a big thing, that OpenAI is a not-for-profit that is starting to look like it would be another for-profit company. Today we have Michigan sentiment prelim. This could be quite important, although it doesn't trump the CPI number. Michigan sentiment prelims expected at 58 this morning. Pay attention to it. It'll take place 30 minutes after the open. The S&P currently is really in a balanced profile. It's completely balanced. The S&P has the mid, VWAP, and the overnight point of control all in the same area, around 65.86 to 87. The volume has not been all that great, 112,000 contracts so far. My platform actually says 140,000, which is still not great. You could see the R-vol, the relative volume at this moment of time. We do this in 15-minute slices. At this moment of time, compared to the average of this moment of time in the last 20 sessions or 1 month, we only have about 81% of the volume and 61% of the range. So the S&P is pretty much in a resting state. The interesting thing here is, of course, it's resting right where yesterday's point of control was. So we're accepting value up here in a decent way. The range is 20.25 points. The inventory 78% short. Nothing dramatic to talk about when it comes to the S&P. Commodities, again, getting a lot of attention. Commodities are really important currently. And so we see gold climbing a little bit, $13 per ounce. And we're seeing silver push up 34 cents an ounce. And then ETH is breaking higher as well. So that's what we have. Let's take a look at the charts. That's why you're here. This is the S&P. The S&P, if you recall, on Wednesday we talked about the fact that the S&P, and I'm not going to pull up the video, I did tweet about it to show and ask, did you understand in Wednesday's video why the expectation was for responsive selling back to settlement? That's really important for you to get. Remember, these videos are not intended to be something that is just in the moment. The video is intended to reinforce an approach to the market that is robust and based on the auction process, using volume, market profile, using price action, and order flow. That's basically how I've been trading for the last 20 out of 25 years. Have not really adjusted how I look at the markets, and here I am still. I've always done this professionally. So this is what I'm sharing with you. And then so on Friday, we opened at 53. We pushed right up into the 60. We had a measured move high in that area. We pushed, we tested, we had a bit of an excess, and then we started to turn over. And as soon as we turned over and below the DGPs or day generated prices, the VWAP and the mid, then it was all about selling back into the prior day's high to close the gap. Remember, gap and new all-time highs is exhaustive. And so we expect the market to be responsive. I mean, if you woke up one morning and you saw that your position was well into the green, into a new all-time high gap, you're probably going to take something off the table. In fact, one of my fund managers yesterday called me Was it yesterday or Wednesday? Whenever the Oracle day was, where it was up 30%, 31%, he called me and he said, "Listen, I want to I want to close out of this Oracle position. I want to take half off the table." This is a very, very experienced, like 40-year tenure as a fund manager. And he's like, "I want to take 50% of Oracle off the table. This is going to result in a capital tax gain. It'll be a long-term capital tax gain. Am I allowed to do this?" And this is kind of like, the reason I bring it up is because it's kind of like what I see happening in the market, right? It doesn't mean you close your position when you find yourself in a new all-time high gap, but there is some selling pressure that's likely to come in, and that's what we saw. And we've seen that, every time we gap into new all-time highs, you'll see the same kind of response more often than not. It's not 100%. So that day, it dropped back. It went right back into our support zone that you see in green there between about 65.28 and 65.33. It went in there, and it missed the exit on front running prior settle by 2 ticks, running all the way down. It missed by 2 ticks before it rallied back up. And then you had yesterday's Globex right in here, basically chopping until CPI. We expect it to chop. CPI does its thing, and then so we end up with the CPI box right here that we have to pay attention to. We opened inside of the CPI box. And we managed to take the SOC of the CPI, so we cleaned up the disruption of the CPI, and then off to the races it goes. And the S&P basically had very poor structure beneath. We had basically an excess low. I'll show you that in a minute and what that means. We had an excess low beneath. And then we ran up, and what we ended up doing, and what's important, is we ended up in a P-shaped profile. So you can see the profile is very P-shaped, which means that value followed price, right? So we managed to move price to the upper end of the range, but we did leave poor structure underneath. And you can see that we have single prints in 2 sections here. We have single prints, and that tells us there's weak structure below. So as it rolls over, we expect it to run through. Notice yesterday it pushed right into the mid in the overnight session and hit the mid basically right on the nose, just punch it right on the nose, and it bounced off. That we see that happening here and there, not always. So it's holding the mid, and so now this overnight low will be interesting because the overnight low opens up the door towards the weak structure below, and is likely to see us zipping down into this box structure here, into this balance, which comes from here and the overnight session. So if we do fall through, and I'm not saying that we would, we're holding price pretty well. We're trading at 65.92 currently. We're right against yesterday's point of control, right against prior settle. Basically, the product is unchanged. Prices are unchanged currently, so we are opening imbalanced against yesterday's close. And so the market's basically saying nothing to see here, nothing to do here. There was not enough incentive to push price down to explore for buyers, and buyers have not been able to, or didn't need to, check for sellers above. And so this is basically going to fall back on the fact that the market imbalance is to the buy side. You can see that we're making higher lows. We're one-time framing up. We're making higher lows. So bulls are in control unless we break this mid here, this mid and the overnight low here, and start moving into this weak structure below the single prints. So as soon as we do that, I'm going to look for a weak bounce, and if we get a strong bounce, then the short cannot be on. If we get a weak bounce, then the short will be on, and then from there we trade from level to level. Right, we start to look for the next level down, which is the 61.75. the former high. And then from there, we're looking for balance down here. Okay? So 60, 62, then 50 on the downside. On the upside, if we pull back mildly, push up with an impulse, take out the overnight high instead of the overnight low, and then consolidate up here, then we're looking for it to just squeeze into the next measured move high. And, we're so tight up against 6,600 here. 6,600, the century figure. If it manages to do that, then we're looking for a weak pullback for a long, and then we're looking to continue for 66, 26 from there. That's what the structure's showing. Here's how we get the weak structure. So you could see on this chart what this is doing is it's coloring in, it's shading in areas that have weak structure. And you can look to the left and you will see that pretty much whenever we have single prints, we had single prints all through here, they eventually get filled in, right? So here are some single prints, here are some single prints. These are very, very tiny. They got filled in right here. Here's a bunch of single prints here, pretty good structure there. This, again, all-time high. What does it do? Checks up, drops down, puts in a B-shaped profile, right? So that's basically what I was talking about that happened on Wednesday. We're opening in a gap in new all-time highs, check up, come down, generally put in balance or a B-shaped profile. Yesterday, it ended up pulling back because we had basically a balanced profile, ended up pulling back to the value high in this case, which is also a setup. It's a classic market profile based setup. When we have balance, we're looking for the test of value high and value low, depending on where we're opening. And then yesterday it checked that value high and then squeezed up, and it left us with these single prints. And so when we look at what's happening here, we see, look at the volume. Right? Look at the volume. It's very choppy. We could see that there's just weak structure. So we have an excess low that begins right here. We have an excess low that begins right here, which means that the market did not check those prices at all. It basically tested this bracket. It ran through the bracket without rotating. We want the market to rotate on itself. We want the auction to go two-way. Even if it's rallying, that would give us good structure. And then it left single prints here and here. And then the overnight low is right there. So if we do take the overnight low, we're left with a set of single prints. And then we're left with this excess low that takes us right back into yesterday's range. And that's what I was saying we would be shooting for. The 62, then the 50 below. That's what I'm looking for today on the downside. And you could see that the market ran into the close. This could be considered an excess high. You could see that, it just, in the last bracket, in the last half hour, it just ran up and then it found sellers. You could see there's some collisions there. It found sellers, came right back and closed right there. Settlement is right here. Settlement's in orange right there. The little label in orange, that's your settlement. 92.50. And so what it did is it poked up above. It reached its arm above the water, poked around, came back in, and settled where it came from. Very interesting. So we have excess low and a small excess high. And we are in the middle of that. And that's why it's hard to say which way this might roll. So we have to be nimble this morning and just wait for it to break. You just got to wait for it to break. Not much to do there. So that's the S&P. Crude oil. Crude has also been interesting. Crude traded in this big rally the other day. It rallied right into this kind of bashing its head against the overhead zone that we have. It was unable to hold the 64. The next morning it came in and it sold off. This was yesterday's overnight. And then the day session is just this. It was just awful. yesterday. The day session comes right back to the magnet. This is our magnet, this purple line here, and it finishes or settles right on the magnet. Then the overnight session opens. I feel like if you're trading crude, you should be located in Europe right now or in Asia. We open back up. We basically, like water, like milk falling off a table here. It pours right over and it goes right back to this level that we've had here for several weeks, this zone that we've had here for several weeks. It tests that zone, and then that's where the rumor on the sanctions against Russia and anybody buying energy from Russia starts coming in. It starts really with the European Open. And look at this. It covered the entire balance range in one go. Really important right here. So let's put a zone. This is very important. Very likely to test this area. Very likely to test this area and get a reaction. That's a first time reaction trade. So as it pulls back in here, I'm going to be stalking for a long back towards the open if it does get down there. It also happens to be the mid. There's the mid of the session right there. This is pretty much a strong setup for me. I'm going to look for it to pull back into that 62.80 area right here, and that's going to be a stab at a long. As long as I see that the push down is losing steam, the sellers are losing steam, then we're looking for order flow indications that it's just not able to push. It's trying, but it's not able to push. Look for a long and look for a squeeze. Well, I'll follow up on Monday. Since I'm doing a video on Monday, I'll replay this and I'll explain that I'm looking for a squeeze right in here. The expectation is that it wouldn't just run through this area. It would actually respond here with a higher low or something and then try to test up. And then basically, overall for crude, I'm expected to finish right where it is now after testing, to come back to the point of control of this entire balance zone is exactly where we are. That's the point of control right here, that little white line that you see there. So crude's in a precarious spot because it tested from the extreme low to the extreme high, or the balance low to the balance high in one fell swoop, and now it's pulling back into the middle. So it could get choppy, but still I'm going to take this. I'm going to be very interested in this trade as it pulls back to it. Does that make sense to you all? Other than that, crude hasn't done much. The overall trade in crude has been quite choppy during RTH, and it hasn't yielded much opportunity. And I have to say, kind of similar for gold. You know, I monitor gold here on the side. Let's clean this up. I monitor gold here on the side. I don't normally talk about gold, but it's very, very choppy. There have been some pretty good setups some pretty good setups in terms of continuations. But with gold, you have to have the patience of a saint in the Himalayas somewhere. You have to wait for it to push and then trade the continuation in gold. If you try to trade a reversion in gold, you're likely to be handed your heart on a platter more often than not. Okay, so I'll leave you with that. That's a long one. One more thing, a really important thing. Sunday night, when we open, we are going to be trading December on the U.S. indices. So the ES, NQ, RTY, YM, EMD, all will be trading Z5. So at today's close, if you follow me on Twitter, and if you're in Convergent, or if you follow EdgeClear's Twitter or Convergent Trading's Twitter, you're going to see the table that shows you the premium differences for the roll. So after today's settlement, we are done with September, and then next week is rollover and expiration week. Okay? Do not trade September on Monday. Just roll forward, adjust your levels over the weekend, get ready. Everything is going to look different. The prices are going to look different, and it just complicates things for about a week. And then after that, it's all good. Okay? So, again, we're rolling on Sunday night's open. We're rolling to December 2025 or the Z5 contract. So your symbol is going to be MESZ5, MNQZ5, NQZ5, RTYZ5, whatever, Z5. Okay? If your platform doesn't roll, force it. Good luck, and I'll catch you then. Don't forget to hit the like button. Leave your comments. Give me feedback. Let me know how you're doing. How are you doing as a trader? What are your struggles? I try to get in there and respond to all the comments of past videos. You might want to browse through, but do like and subscribe to the channel so other traders can find it. Good luck.